Hey guys, this is John with TRD Trader coming back at you with another Set It and Forget It Sunday, or if you're watching this, Set It and Forget It Monday. So if you've been paying attention, you might have noticed that I've been gone for 2 weeks. I work in corporate accounting, so at month end, I have a lot less time to do these things. So 2 weeks ago, I was too busy with work, and then last week, I was busy with hanging out with friends. But I'm coming back this week. I'm charged, recharged, got my batteries topped off to come and bring you some more put options that I like to do. So without further ado, I'm going to review my performance from the 2 or 3 weeks ago that I last called options. So I had called ASO, Blink, Fubo, Halliburton, Marathon, MVIS, Riot Shift, Six, Tupperware, Viacom, Hood, and Workhorse. These are some of the options that I chose. I'm going to go over the options that expired and the ones that didn't. The options that expired out of the money, they didn't get exercised. You kept that premium free and clear. So that's one bucket. And then the options that were exercised because I didn't call an accurate floor. So let's go over the expired real quick. That'll be, and then we'll go, you know, best case scenario, middle case scenario, worst case scenario. So let's look at the best case scenario first. I had called Blink, Fubo, Halliburton, Riot, Six, Tupperware out of the money. So if you had done any of these put options, if you'd sold any of these puts, you would have got anywhere from 2.5%, almost 2.5% return. Over 2.5% with Six, 2.25% with Blink, down to, just under 1% with Fubo. So if you'd looked at any of these options, if you had participated in any of these options, you would have put up $2,800 in capital and you would have made $65. You would have put up $4,250 in capital, and then you would have made $115. So, if you get 2.5% in 1 week, and you're lucky to get 0.2% of return a year in a bank account, these turned out pretty good for you. Now let's look at the options that were exercised because I didn't quite call an accurate floor. And here we have two buckets. So all of these are exercised, but we have buckets. Bucket one, you can immediately sell for a profit. Bucket two, you can turn around and sell it, but you're going to sell it at a loss. And in these cases, I like to turn around and sell calls, and that's what I call the wheel. I sell puts, making money, getting the stock, and then I sell calls, getting money, selling the stock, and it just goes around and around. So let's look at the middle case scenario where you could have sold for a profit. I had called ASO, Hood, and Workhorse. Our basis, if you had done these plays, you would have sold it. You would have had a strike price of 42, less your premium of 185. So your basis would have been $40.15 per share. The closing price Friday afternoon was $4.19, so you could have sold it for 4 pennies profit. Similar scenario here for Hood and Workhorse. Workhorse, your basis would have been $7.18. You could have sold it for a 20-cent profit. Your basis for Hood would have been $41.45. You could have sold it for a 45-cent profit. And these, not Workhorse. Workhorse continued to fall to about 650-ish. But these other two stocks, they basically hit their floors. ASO is bouncing around between 40 and 40.50, and Hood is bouncing around between like 40.50 and 41.50. So these are pretty good floors for these two stocks. Unfortunately, Workhorse, it is that one of those companies that in the last couple of months has taken a dive, and it's probably going to continue to keep falling to maybe $6. There's no real way to tell because we're kind of in uncharted territories right now. It could keep falling further depending on what market sentiment is. Obviously, I'm not a genie. I'm not God. I can't tell what market sentiment is. It seems to have hit somewhat of a temporary floor at about 650, but we'll see. We'll see how that plays out. And just to show you Workhorse real quick. Let's look at the charts. Is this Workhorse? Yes, this is Workhorse last month. Yeah, you see it hit this floor. If we go back 6 months, it's kind of been on a long-term downtrend. And I thought that there was a solid floor here at like 9 or so. It just kept falling and falling. And in the last 5 days, in the last month, it seems to be bouncing off this $6 level. So it seems $6 is probably the floor. It bounced off this 650 ceiling, right? It came back up, bounced off the 650 ceiling, met resistance, came back down, bounced off the $6 floor, picked up support, now broke through the 650 ceiling, seems to be falling again. It's anyone's guess if it keeps falling back to the floor of 6, or if it bounces off this 650 and breaks through to the next ceiling of about $7. So we'll see. But going back to the options, these are the ones that had, if they were exercised, you could have exited for a profit. Now the ones where you couldn't have exited for a profit, in these scenarios, I like to turn around and sell calls. So we had Viacom, Shift, MVIS, Marathon. Bitcoin went up in the past week or two, so Marathon, you probably would be in a gain position right now if you got in at 33.28. So let's look at Marathon, what the price is now. Yeah, so Marathon, the price is almost $50. So if you gotten in on this put at $33, you'd now have almost 60% gain on the stock. So, these crypto stocks follow crypto, and crypto has been at a floor for about, it hasn't been at a floor. It's been falling for about 6 months, and it only recently started to pick back up. It fell in April, and then you see this territory right here is when it was a good deal to buy these crypto stocks. And now that crypto's going back up with all the debt ceiling scares and whatnot, you can see that these stocks are following. So these are the ones where, if I had gotten exercised, I personally would have turned around and sold calls. So you would have gotten locked in at a basis of $33.28, $11.65, $7.20, and $39. And then you could have turned around and sold call options for 1.7% return, 1% return on Shift, over 1% return on MVIS, over 3% return on Marathon. MVIS is another stock that seems to keep falling and falling and falling. So yeah, it used to have a long-term floor of 13, but right at about 2 months ago, it just, not even 2 months ago, right at about a month ago, with the news that it was going to get bought out by another, or it's looking to sell itself to another company, the equity owners, the stock just kept falling and falling and falling. So when you're watching these videos, MVIS is one of the riskier plays. If you're new to this, I would stay away from this stock. If you're not comfortable holding on to stuff, I would stay away from this stock. And this is a recent development, right, within the last month. So, but yeah, you can see historically up until the news that it was trying to sell itself, it adhered pretty well to this floor here. So yeah, you could have turned around and sold calls for a decent return. MVIS being the one where it kept breaking through that floor. So this is the one stock that if you had been stuck in, you wouldn't want to sell calls. You'd want to take the loss, 2 or 3, 4% loss rather than a 25% loss, because it's at like $7 right now or something. But the other 3 stocks, if you had turned around and sold calls, you would have been in a good position. Shift is at like $6.50, so not much of a loss. Viacom's at $39.50 or $39.40, so not much of a loss. And you're just turning around selling really good premium until Viacom comes back up. Marathon's already up. As I said, it's up like 40-50%. So definitely 2 of these calls ended up being pretty good. 1 call, Shift turning out being pretty average. And MVIS, it was a dud, man. I'm sorry. I made a bad call on this one. And not anything I could have foreseen. But, MVIS really turned out to be a crab crab sandwich. But, that happens sometimes in the market. that happens sometimes with some companies. That's why I have a number of companies I look at. And, unfortunately for me, one of the portfolios I'm managing is at like 32% gain. So even though I have a crap sandwich with this one, I have gains from other companies that are lifting the portfolio up, lifting it up and carrying the losses from this. So it's not too bad. And to note that 32% returns over like 5 months or 6 months. So the returns are pretty solid with this wheel strategy. So yeah, these are the calls I made. Going back, just a real quick recap. About half of them expired out of the money. You kept the return free and clear. And then half of them got exercised. Of the ones that had got exercised, half of them you could have sold for a profit. And then the other half, you could have turned around and sold calls. On the whole, with the ones that turned around and sold calls, one was a pretty crappy option, but the other three didn't turn out so bad. And one of them turned out really good. So that's my performance from 9/27 to 10/1. So let's go ahead and look at the options I'm looking at for the upcoming week. So for the upcoming week of 10/18 to 10/22, these are the options I'm looking at. ASO, Academy Sports and Outdoors, Smith & Wesson, Blink Energy, Caesar Entertainment / Gambling, Fubo, Online Streaming TV, Golden Nugget, Online Gambling, Marathon, Digital, Cryptocurrency, MVIS. As I said, this is probably the crappiest choice so far out of all the ones I've made, so I would stay clear of this if you're new to this game and you're more concerned about your money being tied up in stock. Shift, Six Flags Theme Park, Tupperware, Viacom, Hood, which is Robin Hood, Workhorse. Workhorse, it didn't turn out to be as bad as Viacom, but it hasn't been doing great either. It seems to have met a $6 floor. Let's see if it breaks through that or if it holds. I think it's going to hold, but who knows? So yeah, out of all the options I call, Workhorse and MVIS have definitely been the least performing. So, if you're new to this, you may consider staying away from these two stocks. And, to be fair, all of this precipitated with the inflation scares. With the inflation scares, the newer companies whose incomes are in the future and who are borrowing on cheap debt, their stock prices seem to get hit pretty badly. And unfortunately, that's MVIS and Workhorse. But yeah, so I'm looking at the options I'm looking at for these stocks. A price floor of 40 for ASO, 20 for Smith & Wesson, 27 for Blink, 107 for Caesar, 27 for Fubo, 16 for Golden Nugget, 42 for Marathon, $8.50 for MVIS, $5 for Shift, $42.50 for Six Flags, 22 for Tupperware, 39 for Viacom, $40.50 for Hood, Workhorse, $6. I have various rates of chance of profitability ranging from 62% on Viacom up to 90% on Marathon, 93% on Shift. I'd say if I had to recommend two stocks, Marathon and Hood, those are pretty good options right now. I'm a strong believer in crypto, so by extension, I think crypto companies are going to do good. Not only are they going to do good right now because crypto is going up, but they'll do good long term, and you want to be invested in those stocks in the long term. One thing to note about Viacom, the option I'm calling here is technically an in-the-money call. So if we look at Viacom, you see that it's currently at $38.92. And I think I'm calling an option of $39.50. Where is it? I'm calling a $40 call, a $40 put. And it's currently at $38.96, which means if this, more than likely, it's probably going to expire in the money in a week. And then you'll be forced to buy the stock. That being said, Viacom is a solid value buy. It is not a new stock with, uncharted revenues. It is a stock that's well known. It's been around. It's profitable. they're investing in ways to try to remain competitive with stuff like Disney and whatnot, but it is an older established stock, and so it is a known quantity. It is a bargain buy at $40, and if we look at what the analysts say, analysts are saying that it should be ranging. The analysts who don't like it say it should be 33. The analysts who are fair or favorable toward it say it should be between 50 and a $90 stock. So I'm bullish at $40. I think it's a value buy at $40. And historically, it seems to, outside of inflation fears, it seems to range between 39.50 and 43.50. If we go back 6 months, you'll see that it regularly hangs around. So here's our $40 mark, right? This is where I'm calling our option. It regularly hangs above $40 about 50% of the time. So, if you sell this put, sell it with that in mind, that there is the high likelihood that it's going to expire in the money or you're going to get stuck with the stock. That being said, I would gladly buy this stock at $39. That's me. I'm comfortable with my money being tied up with stock temporarily, and it's a known quantity. I'm sorry, I didn't call it at 40. I called it at 39. So if I go back, right, did I call it at, sorry guys, I was looking at Hood when I did that. No, yeah. Am I, maybe I'm looking at, I've got two different Excels open. Yeah. So I called Viacom at 39, not 40.50. So even better, right? Because I already showed, let me close out of this guy because this guy's turning me around. So at 39.50, here's 39.50. You see that most of the time. I wish I could draw a line right now. 39.50. Well, you're just going to have to imagine it. You see this line right here, right there, 39.50. You see that most of the time the stock is above this line. So for me, 39.50 is a solid value buy for this stock. And that's because it's so close to this, because it's in the money. That's why the chance of profitability calc is lower. With stuff that's further away from the money. So for instance, Marathon is pretty far away from out of the money right now. And you'll see that that's why that has a 90% chance of profitability. Similar with Shift. But yeah, so if I had to recommend two options, or not recommend, but the two options I'm looking at selling most this week, it would be Hood and probably Marathon. And you'll see that the rates of return, they range anywhere from 1.5% to 5% for Tupperware. One important thing to note, you'll see that the period this ends, some of these are in October, other months are in November, because not all options are 1 week at a time. Some stocks are 1 month at a time, so you have to be careful when selling these options that, if you're going to sell a month-long stock, you should know that and be comfortable with it. If not, you may consider sticking to the weekly stocks. So yeah, these are the options I'm looking at, guys. Just to recap real quick, some things to pay attention to. Be careful when looking at 1 month versus 1 week options. I would say if you're newer to this game, try to stay away from Workhorse and MVIS. They've experienced kind of a falling knife in the last 2 or 3 weeks. They've just been falling to new lows that have never been seen before, and it's only anyone's guess where it's going to stop. The options I'm really looking at are Hood and Marathon. We have various rates of profitability, various rates of return, various rates of profitability. So I hope I hope you guys are in the market. I hope you guys are learning. I hope you guys are seeing that, a lot of the times you can make really good calls and make really good money. And then some other times you have a crapshoot with stuff like Workhorse and MVIS. And, hopefully you make more money than you lose. Right now, that's definitely the case for me. It's at 32% gains in 5 months. So not too bad. But, you live, you learn. You become more cautious in some ways and also more risky in others as you gain more confidence and know when a good scenario is present and when a bad scenario is present. So, guys, that's going to be it for tonight. Sorry I was gone for the last 2 weeks, but I was a bit busy. Please let me know if you have any comments or if you want me to do any videos on anything. Like, subscribe, and I'll see you in the next week video.